Good evening, friends. The result season has started. Inflation data has come in, and one big event that is coming next Tuesday. And of course, I'll be in front of you next Tuesday, and that is budget analysis. Lot of expectation, a lot of rumors in the market. But one thing is certainly that this time government do have a lot of leeway in terms of managing expenses. Why? Because RBI has given more than what government was expecting in terms of dividend. And second thing, you would have seen that collection on the personal income tax has gone up substantially. Whether you look at STT, whether you look at, and personal income tax also driven by capital gain, isn't it? Short term and long term. So I think this time government has been, has a much better leeway to manage the expenses. And let's see how this government uses that money to either spend on social causes or spend on infrastructure. How they do it, and or do they prefer to bring down the fiscal deficit? We need to wait and watch. Result season has already started. We all know that IT companies have surprised positively, and I'll discuss that too in my today's presentation, and then of course we'll open the floor for question and answer. But before I begin this webinar, just a small disclaimer that this webinar is just to enhance your understanding about the equity market. It's purely for education purpose. Please consult your financial advisor before buying or selling any stock. Past performance no indicator of future returns, and investment in securities are subject to market risk. Now, before I go and talk about June numbers and so on and so forth, there are two data points which I thought I must bring it to you people notice. Number one, the market cap to GDP, and this is data is as of June 2024. And if you look at this, India's market cap is next to only, because it shows 148, but it's more than 150 as I speak to you based on this data. But anyway, the data is that we are second only to the US in terms of market cap to GDP ratio. US is a completely different animal. Why? Because full account convertibility. The whole world wants to invest in that US market, global fund manager, and so on and so forth. So if it is commands at 224%, so be it. But no other country has been able to do that. And India is commanding very second. In fact, it's more than 150, which I presented the other day. So that's the kind of stuff. And when I compare with some of the countries like China, 47%, Brazil, 38%, even Germany, like 59, UK, which is very close to us in terms of market cap, it's 104. Even Canada, which is a developed, 138. Korea, another country, 114. So somewhere, India is commanding a very rich valuation. And this I have been saying, but it's becoming more and more rich. And that's something called melt up. The way we have melt down, there is something called melt up. When that melt up result into a correction, we don't know. But it will happen eventually, because market cannot ignore fundamental for a long term. Today, the name of the game is momentum. People are very happy with their momentum play. And they've gone so overconfident that I keep hearing many investors saying, मेरा खुद का portfolio तो बहुत अच्छा चल रहा है, आपका नहीं चल रहा है. And that arrogance, that what we call boastmanship will basically pay very dear price as and when the corrections happens, because तभी पता नहीं चलेगा क्या करना है. When to lock in profits, whether you catch falling knife, not falling knife, so and so forth. But this is not the only one data. There is another data, and if you look at India's contribution to total market cap, India has been commanding average 2.7 to the global. Today we are commanding 4.2%. All-time high. Do we deserve that kind of this one? It's a matter of debate. There is excess. India is commanding what it has been commanding the rest of the. In other words, while the world market is growing, but India's market cap is growing much faster than. Then only you can contribute more than to this one. Am I right? So it's 4.2. Does it show little excessive? Answer seems to be yes. In last couple of days, the volume on the cash segment on NSE has come down. It's still above 1 lakh crore, but it's come down what it was there, like 1.5 lakh crore था, उससे कम हो गया है. There is some amount of a softness coming in. Whether it's a concern because of budget, before budget, or is it genuine concern on the valuation, we don't know. Once that budget is coming, budget will get presented, we'll come to know how much that volume that has not been lost, which comes back. But we'll wait and watch on that. Let's come back to and switch my gear to and take up on the IT side. TCS does not give any revenue guidance, but they did give an EBITDA guidance of 26 to 28%. If I look at last year, that is FY 2024, the EBITDA was 24.6. In other words, they do expect the what we call expansion in the EBITDA margin for this financial year. HCL Tech almost very similar. So is the case with Tata Elxsi. While HCL expect 3 to 5% growth in constant currency terms, Tata Elxsi expect more than 30% growth in terms of this one. But if you look at it, TCS did mention in their con call that they should expect better revenue as compared to what it was there in FY 2024. Now, these numbers have clearly changed the mood for the IT companies. And when I come to the data part about which sector performed the best in last 5 days, trading days, you will get an idea what I am saying. If you remember, I have been keep talking about sector rotation. Leaders of today may not be the leaders of tomorrow, and the laggards of today may be leaders of tomorrow. That thing is started happening in a slow and steady manner. Those who are still in the recency bias, still in the herd mentality, are going to pay a very heavy price in the months to come. How they pay, what they pay, we'll wait and watch. Till now, the numbers have come. That numbers have come really good in the sense top line has grew by quarter-on-quarter 1% and profit by 1.1. But Y-on-Y profit has gone up by 10% and profit by 15%. Our sense is that as compared to June 2023, the number for June 2024 in terms of profit would be more or less similar. But right now it shows 15% jump as compared to June 2023. As the result season progress and more companies come, our sense is that that data, the growth number, that is this number I'm talking about, will see a decline. Let's see whether that happens or not. Last 1 week, the IT is in the top of the table, 3.9%, 4% gain in just 1 week. The sector, which is realty, which has been the darling of the investors, is down by 0.1% last 1 week. What comes as a surprise is that small cap underperformed the Sensex and mid cap underperformed the Nifty. Can you see that? So slowly and steadily that things are changing. PSU Bank for a change again in the green. So PSU stocks, FMCG did well. Hope is that the numbers would be good, number one. Number two, there could be some relief that could come in to the taxpayer, which in turn could boost the exemption, increase the exemption, which in turn could basically boost the FMCG demand. The challenge for the finance minister would be how much relaxation you need to give. If you give too much relaxation, it can create a problem on the inflation front. Why? More demand chasing less good, it pushes up the prices. And we all know that inflation, whether it's a retail or WPI, both have gone up for the last published data. And hence it's a very dilemma that finance ministry has to play with or deal with to understand what needs to be done. YTD, that is in till July, 15 July, PSU stocks are at the top of the table, followed by Nifty Realty. Auto did well, mid cap and small cap almost very similar, and Nifty and Sensex, which are the leading indices, on the bottom of the table. If you look at it, IT most probably should outperform now Nifty and Sensex in next 1 month, and so is the case with Nifty Finance and Bank Nifty. I think the second half should belong to these 4 sectors which have been laggard. I would not be surprised when I come to you and say first half and second half. The second half is dominated by the IT, Finance, Bank Nifty and FMCG. They may do so. So that could looks like that's what the story looks like. FIs have continued pumping money, 24,000 crore in the month of July. With this, let's open the floor for question answer. So I will try to remain very brief so that we can take up more questions and answers in the webinar. Amir was saying that sir सवाल खत्म नहीं होते लेकिन time खत्म हो जाता है. So I thought let me make a very brief presentation so we have enough time where we can accommodate each and every question that our investors are asking. Over to you, Amir. Vathis is saying in bull market every advisor is successful, but in bear market only very few. How come the scientific analysis go wrong for many? So you are right. That's why Warren Buffett has said that high tide lifts all the boats. Only when the tide turns, we know how many people were swimming naked. So I think you are right. So the good successful fund managers are those fund managers who have been able to navigate the bull and the bear market. If you look at us, we weathered the downfall of March 2020. We weathered the market of FY 2023, which was extremely challenging. So we did that, and you are right. So that's why we keep saying in our PMS what we did, that we are saying that we are not chasing the momentum stocks. We are not chasing the leaders of today. We are chasing the leaders of tomorrow. So our IP is trying to find out which could be the sector which could be leading from the front going forward. And we have taken exposure. Like I'm happy to inform you that one sector we have taken a great amount of exposure in telecom. And you will see that things playing out very significantly. We do believe that NBFC should now start outperforming. Banks Nifty should outperform. So that's the kind of strategic step that we have taken. So you are right, absolutely right. And how people go wrong purely because of herd mentality, because of bias. You go overconfident because bull market create more arrogant investors. I again repeat, bull market create more arrogant investors. They think they understand much better than the market. They think they have actually conquered the market. Market अब उनके इशारे पे चलता है. That's kind of confidence they will have. And that arrogant investors will make mistakes, fail to learn, and the logic that apply to investors will also apply to some of the fund managers also. They think that they've got the magic key. They know what to do and what not to do. And then they basically do that. So many times the scientific analysis do go. See, market is not scientific, what we call is a perfect science. Okay, why I'm saying so? There is no, so if you ask someone if the rate of interest goes up, the market should go down, isn't it? Had that happened? Answer is no. When the rate of interest moved up, market also moved up. There is a common sense that if FII sells, market should go down. Had that happened? Answer is no. There is no. So, in science itself, if you have a 2 atom of hydrogen and 1 atom of oxygen, it will create water. ऐसा कोई जरूरी नहीं है कि आपका ये होगा तो ये होगा ना ये in the equity market. Equity market is completely different animal. And the more you try to do it scientific manner, the more probability that you would basically burn your fingers, So you need to be little grounded to the earth, to the ground reality, understand what is working, what is not working, and based on that you need to fine tune your strategy. If you are not able to do that, I'm afraid. So we keep saying that equity is not about short-term gains. Equity is all about long-term gains, creating a huge amount of wealth for the investors to create. And that's where you said. So sometimes, some fund managers also get tempted to create that short-term alpha. They make big blunders on the long run because the blunders will basically haunt them for a longer period of time. And that's what they do. And that's why you need to be well grounded to the reality. Unfortunately, bull markets create arrogant investors. That was true in year 1993. That was true in year 2000. That was true in 2008. And is also true in 2024. Surendra Sir is saying, I'm a new subscriber. Will it be possible to organize a session for beginners so that maximum benefit could be availed from your platform? So we do what we call platform where webinar where people do come, where someone basically explain you how to use our website, Surendra Sir. And if you want, we can share you the link also of that webinar, so you can watch it and you can maximize the use of our website. But we keep doing this webinar very often. When did the Kevin did, am I right? Last webinar? या उनका लिंक भेज दीजिए ना, if possible you can paste it there, please paste it, that's for the investors. But if you can write to our customer care department, they will send the link. You said Sunil Damania asked me to write an email to you, please share the link, they will share the link. That this complete webinar will help you to do hand holding to understand which are the features that we have on our website and how you can maximize this feature. Harsat Kale saying multi-assets fund versus balance advantage fund. Your remark, please. I must admit, Harsat sir, I don't invest in mutual funds, so I'm the worst person to ask this question. I have not looked at it also. This kind of an assets class. See, balance advantage, as name suggests, is basically a mixture of equity and debt. And I always keep telling investors, if you are a long-term horizon, then why to go for balance advantage? Why to basically then go for pure equity funds and enjoy the ride. But you said, okay, I want to be little conservative. See, the people will come with the products to sell the product. You need to understand what suits your risk appetite, what's your investment horizon, time horizon, what is your risk appetite. And these are all the functions that decide which fund is the best for you. Remember that. So my request would be and suggestion would be, don't put this way. Just decide first what is your objective, what is your goal, and then say whether it's a multi-asset fund or whether it's a balanced asset fund, which one basically then help me to meet that goal. If I don't know what is your goal, it's very difficult for me to tell you which is the right product for you. Is the KC Abraham sir, is the Mojo PMS stocks comprising of Mojo stocks only? No, the PMS has a complete different basket of stocks, and they may not be a Mojo stock. Okay, there are many companies which could be held on the MarketsMojo website, but we will be holding those companies in our PMS because we have different IP altogether, and that's why Mojo stocks and PMS stocks are absolutely different set of basket. There may be some common stocks, but not all. Dear Sunilji, who's asking this question? But hello, I can't see the question on. Hello. Vikram saying, how to find a right sector to invest? I think, sir, that's $1 million question every fund manager is trying to grapple with. There is no one standard formula. Had it been so simple, everyone would have found out and everyone would have become a multimillionaire. So you need to understand what are the future prospects, what are the demand and supply scenario, what are the entry barrier to enter that sector, and so on and so forth. Just to give an example, like for example, telecom has gone through the worst of the phase, am I right? And now you started seeing some pricing power coming back. If you look at, you started consuming more data than what you used to consume maybe 1 year back. Now what does this mean? Then there's an entry barrier. There are only 3 private players in this country right now. Someone can enter right now? Looks difficult because they don't have a license, they don't have a spectrum, and so on and so forth. So entry barriers is huge actually in this sector. Am I right? So that's it, because then FMCG company, for example, what's the kind of power moat you have so that it creates an entry barrier for someone else actually. So what's happening globally, for example, if there is a shortage of certain products, and this sector, India can supply that, then you need to look at it. For example, metal, then you need to look at what is the demand supply situation globally, because this product can be easily imported or exported, to the various parts of the world. So there is no one standard for one sector. There are different, so you have different yardstick for different sector to look at it, and then basically decide what is very critical to understand in that. So that's how you should basically look at. There is no one standard formula that I can tell you in this webinar कि ये होगा तो this is the best way to find out sector. वो नहीं होने वाला है. Dulgesh is saying, what is the outlook on IT sector and what is your take on defense and railway stocks? They have run up significantly. Rush to buy them has been mind-boggling. So Dulgesh ji, we have been saying on this webinar time and again, in our PMS also, we had one defense stocks and we locked in the profit. Because our business outlook on the defense is extremely good. Our business outlook on the railway is extremely good. But I think many of these companies have run ahead of the fundamentals. And to buy at this level, the risk reward doesn't look in a favor of reward. Some of the companies are commanding in price in excess of 70 and 80 PE. Now, does it get justifiable? The answer is clearly no. Am I right? You do run a risk of a supply coming in from the government. So, and you read today's Economic Times on the front page. I have been quoted in today's newspaper of Economic Times. On the front page, I have been quoted on this one, this one. So my sense is that be little careful. IT looks little promising purely because of, as I was mentioning in my presentation, that Bank Nifty, Bank Finance, IT and FMCG, which are laggards, could be the leader in the second half of 2024. And the way TCS came out of the numbers, the way market reacted to TCS numbers, the way HCL Tech numbers came out and how the market reacted, clearly shows that some smart money seems to be moving towards the IT sector. Ansul is saying, your view on GDP to net profit of India Inc. What is the historical average of this metrics and what is it right now? So right now it's near about 5% net profit to GDP ratio. Historically has been, I think it has gone up substantially in the last couple of years. So let me give you some data, if I can get some data, because I just read one report today only. But so maybe if I can get the data immediately, I'll just try to see that if I can get it. We needed, one second. Very quickly, I'll just try to see if I can get it, because I read so many stuff. It's very difficult for me to sometimes, but I think it was near about 2% or 3.5%, which has gone to 5%. And I think if my memory serves me right, in 2007, 2008 also, it was very closer to that. So in that sense, we are at closer to all-time high, looks like, net profit to GDP ratio. Sasikant is saying, please explain how will the future trend with these 2 data points discussed today. So we talk about market cap to GDP and we talk about India's contribution to total to the overall market cap of the world actually. So what this Sasikant suggests is that, is India running little ahead of the rest of the world? The answer is yes. Is India's market valuations are richly valued? The answer is yes. So that's what this two data suggests. Both the data basically gives a one signal very loud and clear that Indian market valuations become extremely rich. And due to that, risk reward from this level looks little difficult. That's what it becomes little risky. That's what our sense is. And someone asked me about net profit to GDP also gives a clear-cut indication that somewhere we are reaching pretty closer to the peak in terms of net profit to GDP. So that's what the sense is. So we need to wait and watch. And we had gone on the record saying that the June 2024 numbers would be very similar to what June 2023 numbers would be. In other words, we don't expect any substantial Y-on-Y growth in net profit of India Inc. I hope that answers your query. In case if it has not been, please put it again. I'll try to further elaborate on that. Atul, can I have multiple trading accounts on the same pen? Of course you can have it. There is no restriction on that. You can open hundreds of brokers in India. Each can have a trading accounts with the same pen. There is no restriction on number of what we call pen that one can have, or number of trading accounts one can have. There is no limit on that. Jayant is saying, is the difference PSU structure is also the multiple structure? Looks like at this point of time. Yes. So business looks extremely good. The valuation looks a little rich. Hi Sunil, Biosecure restricts outsourcing of drug development and manufacturing related to work by major pharma companies to China. Which Indian pharma will benefit from this? Large cap, mid cap and small cap. So Frank sir, this US has passed that Biosecure Act, and you are right actually in your understanding that this will restrict the import from the China. I think some of the CDMO players, I can't name any company, but some of the CDMO players will get a lot of benefit of that. And if you ask me, there's a one big large player in CDMO which has not performed so well in last 4-5 years. I think that should be one of the biggest beneficiary of that. That's what my sense is. FM Durian Ganawad sir is saying, sir, I have constructed Mojo portfolio score by using only defense stocks, 10 stocks with Mojo score 70 and above. Equal with a week of lost 3.7. Please advise what I have to do, whether to continue or come out of the portfolio. Sir, I'm just repeating now, maybe almost 15-20 times in last 1 week or 20 days or so. We do believe defense stocks are become a little expensive. We did lock in one of the profits in one of the defense stocks we were holding. We had substantial holding in that company. We locked in the profits. My advice would be, please see, when you make this kind of a portfolio, it becomes too risky. If something has to go wrong with that sector, a lot of money can get lost because of that. You should always have a well-diversified portfolio. Even if you make one portfolio like this, don't put all money in this one sector, whether it's a defense, whether it's a IT, anything. Whatever you believe, because then it becomes too. So as a strategy, what you should diversify your. And our view at this point of time, defense stocks are little cautious. So my request would be, reduce your exposure. Don't take too much exposure to defense stocks. That's what my advice would be. William Charles, if correction comes, will it be a shallow or deeper correction? Whether PSU bubble burst? Please give your view. So my sense is that it could be I don't know how do one define shallow and how one define deeper. So do we expect crash in the market? The answer is no. Do we expect corrections in the market? The answer is yes. And you also use the word corrections. So my sense is that yes, it will be a corrections. Now there could be two type of corrections. One is the price corrections, and one is a time corrections. For some reason, if the market corrects heavily, then bounce back would also be very quick. But if the market corrects slow and steadily, then I think what will frustrate the investors is a time corrections. So that's what and are the PSU bubble bust? I don't know whether they're in a bubble zone or not. But risk and reward ratio definitely does not favor a reward from this point, from the PSU. So in fact, we had one PSU defense stocks, we locked in the profits. We had one PSU bank, we locked in the profits because we thought it's better to lock in the profits rather than what we call wait for the corrections and then basically get it out. So that's what exactly we did that actually. So my sense is that if it is a deeper correction for some reason, bounce back will be very quick. If it is a shallow correction, that bounce back will take some time to bounce back. That's what my sense is. Nimesh Kanani sir, honestly, I'm holding many PMS, utilized many advisors in the past, but trust me, not seen a humble person like Sunil ji, and a high person with such in-depth knowledge of market. Heads off to you, Sunil sir. Hey, thanks a lot, Nimesh sir. Thanks for your kind words. Our job is to remain humble, grounded, and give what is right for the investor. Every advisory is in the business, but educating your investors every week by such a seminars is commendable. Job by MarketsMojo and team. Thanks to Mohit sir, Sunil sir, and the entire merit to arrange such a seminars regularly. Thanks a lot, sir. And we will have one more guy now coming in front of you very soon. Is Amit Golia, our group CEO. He will also be part of our webinars very soon. I think that on Thursday, both Mohit and Amit would be part of the webinar. My request to all of you, please come and join. Very interesting webinar that would be. You'll thoroughly enjoy. But I think one thing which MarketsMojo believes, and they've put on the topmost pedestal, is that make investors smart and educative. Give them the tools so they can understand the market. And I must tell you, Nimesh ji, that many investors confess to us that before they started using MarketsMojo, they were not making money from the equity market. And once they started using MarketsMojo platform, they started making money purely because of our educative webinars, purely because of our website, which really helped them to take a very informed decision. All these years, what used to happen is that investors never used to take an informed decision. He would always get carried away by the market rumors and the tips. And rumors and tips will never allow you to take an informed decision. But after coming to this, and if you remember, Nimesh ji, we did a lot of webinars about should you buy a company declaring bonus, should you buy company declaring splits, should you be chasing higher dividend yield stocks, should you believe in averaging the stock, and so on and so forth. And we did series of webinars just to educate investors so that they take a informed decision what is to be done. And it is my promise, Nimesh ji, that what we are doing, we are not going to stop that. Week after week, month after month, years after year, and decades after decade, MarketsMojo will keep educating investors and will keep holding their hands. Thanks a lot, sir, for your compliment. Siva is asking, PMS fees charges can be tax exempted? No, sir. Unless it's a business, if you're coming to the business corporate, then I think it's exempted in the tax, otherwise it is not. Raj is asking, I often notice that the Mojo score of any company is dynamic. It can move from buy to hold or to sell to buy, and again if we keep holding the script. If so, do we need to Mojo score to move in and move out of the script or stay put? Please help my understanding. So Rajji, if the script which was buy and goes to sell, you need to definitely get out of that company. It makes no sense because what does this mean? That this company will underperform going forward. So you should act on that. If the company was buy and moves to hold, so there is a simple formula I'll tell you. If the score goes to near about 60, but price is going up, don't get out of that. But if the script is 60 and the price are going down, then please get out of, even if it is the whole company. So that's what you should do it. See, MarketsMojo does not believe in buy and hold strategy. I'll give you a classical example. Many companies, people basically bought at the peak of the price, whether it's in Asian Paints, Bajaj Finance, Avenue Supermart, Divi's Lab, HDFC Bank, and they continue to buy and hold, and they've not made money for last 4-5 years. So we don't believe in buy and hold. We basically say, and that's why the score is dynamic. If the script is in this one, please go ahead and buy if it is a buy. If the score becomes sell, please get out, because probability is very high that company will underperform. If that company is going to underperform, it makes little sense to basically hold to that company. So that's what we do, sir. What is the holding period of hidden turnaround stocks? What about the stop loss? Ashok is saying. There is no basically holding period of any hidden around stocks. As and when this company basically loses its when to exit, we do send out an email to all of you saying that please exit from that. It could be 12 months, it could be 3 months, it could be 4 months. I think the average hidden turnaround is, I think, 1 year. Average holding period is never 1 year. But not necessarily that every stock would be 1 year. So don't get confused by that actually. But there is no fixed what we call a time period for that. We don't have any fixed time period, and there is nothing called stop loss. We will tell you when to exit through email and through the site. We will tell you whether to exit from that company or not. Vaibhav is saying, what is the trigger of Adani Group sales in the current market to run? I have no idea. To be very honest with you, I have no idea. I think what Adani Group and Adani Wilmar came out with the business updates, and I think they were very promising numbers they came out with. It's just that, government spend more on infra. The one group that maximum benefits is a Adani Group, because if you look at the business portfolio, is more tilted towards the complete infrastructure, whether it's an airport, whether it's a ports, and so on and so forth, or energy and so on forth. I think it's completely tilted in favor of infrastructure. So, if there is more allocation in the budget, that could basically help Adani Group to share price to go up. That's what my sense is. Anil is saying, as I understand the future sectors, IT, NBFC, bank, and FMG, what about the future of railway, defense, and pharma? Through these sectors, have had awarded handsomely to the investors. I have a major stock of railway and defense in my portfolio. Should I think to book profit? Regards. So, Anil sir, there will be some company that may do well. The sector may not do well, but some company may do well. At the same time, the sector may do well, but some company within that sector may not do well. Am I right? So, if it is a Mojo stock, please continue to hold. There is no reason why you need to basically lock in the profits. But if it is not a Mojo stock and it's a sale, then maybe it's a time for you. And pharma, we do believe that it should do well. One sector I did not mention, sorry, but we do believe that pharma should do well, purely because of someone asked me about the Biosecurity Act of US. That should open up the huge opportunity for CDMO player in pharmaceutical. If you look at the data in India about the pharmaceutical product, it's gone up. I'll tell you very honestly, if you look at each and every household, what they're spending on their medicines now is much higher than what they were spending last year or year before that. So somewhere people have started spending more and more money on medicines, and that should benefit pharma sector. So the export market looks good, domestic market looks good, and I think another frontier that pharma companies want to dominate is a Europe. If you go back to the what we call manifesto of BJP, they mention in that manifesto that they want India to be the pharmacy of the world, and I think that exactly would help pharma companies to do well. It has underperformed also very significantly. Pharma as a sector, I think it's a time for them to start outperforming. So that also sector looks little promising. Remember, you need to be little cautious of which company you are getting into. And if you get into a right company, probability is very high that you will create a lot of wealth. Mohana Kumaran saying, it feels good to see you week after week. Every webinar you come out with the new things and we got to learn from it. Keep it up, sir. Thanks. Thanks a lot, sir. The reason what motivates me is you people. You people ask very intelligent question that always help me to, and I always, I consider you people as my guru. Why? For the very simple reason, I've learned a lot from you people. Guru Purnima is coming next Sunday, and I'm really thankful to all of you people because you people give us a lot of insight. Like I remember other day, someone asked us a question between SGB and ETF, which is better, gold ETF and SGB. Even I was not aware about it, and all these years I've been investing in ETF. And when this question was put across to me, I asked my team to work on it. We sat together, we looked at it, and then we realized that SGB is much better as compared to the gold ETF. So even I learned in the process. So for me, when I come in front of you, I also learn a lot from you people, and I'm very thankful to you people. And had it not been your support, active support, had you not been coming, it would have been little make sense for us to basically come in front of you. So I think the whole motivation comes from you people only, where you keep people ask very relevant question, intelligent question that also gives us the satisfaction. That's why in front of you. And thanks a lot, Mohan sir, for your compliment. Under which name you can find performance of PMS in SEBI side? It's Infinity Assets Advisor Private Limited. Infinity Assets Advisor Private Limited. You can get it. Rajesh Patel, I am a Mojo 1 member. My question is, when you are saying shift to large cap, can we buy large cap of hidden turnaround or momentum stock? Yes, you can definitely buy. There is nothing wrong with that actually. If their companies are even from medium small cap, if your risk appetite is fine, it's fine because that's been come based on the IP. So what may happen that medium small cap other may not do well, but that hidden turnaround or momentum may do well. But if you want to play little safe, move to the large cap within that subcategory. Om Prakash Kothari, simple mantra of success investing and making money. Religiously follow advice given. I have benefited. You are absolutely right. Om Prakash ji, there is a one beautiful WhatsApp forward to me which shows a very big tree on the top, and beneath that there are roots available, and there are few roots which says patience, believing in what you are doing. That means the consistency in your thought process. I have seen people, jumping from one to another to another to another. कभी उससे पैसा नहीं बनने वाला है आपका. If you keep changing your lane, to move around, eventually will get stuck. But if you keep a one lane and you are very focused on what you are doing, eventually that would pay. And number 3, I think, is the time. Market is all about non-linear returns. People don't understand that. People think what has worked in the recency will work. तो अगर परफॉर्म अच्छा नहीं किया तो आगे जाके भी परफॉर्म अच्छा नहीं करेगा, और जिसने अच्छा किया वो अच्छा करेगा. I'll give you a classical example. If you have heard about Mirai Assets Management, am I right? That was one of the best mutual fund performing. Now it's not performing. The most of the money that Mirai received when it was doing the best, isn't it? So people got psychology, and I think people need to learn that don't be at the peak of the price. Like something similar happening in railway and defense. Okay, people want to put this one. So that's why I say remove that herd mentality. ये recency bias. ये चला है तो चलने ही वाला है. Let me put that, and that's the biggest disaster for the wealth creation. And we all get happy with micro cap companies. जो बोलते हैं ना कि भाग जाएगा, डबल हो जाएगा, ट्रिपल हो जाएगा. If you can't control your grade, I'm sorry, you will not be successful in investment. I must tell you that. It may look successful in the short run. Eventually वो घर का पैसा लेके जाएगा आपका. Amit saying, please answer my query. What is your opinion about Prakash Pipes and Limited and Wellspun Living? Please guide. Sir, we do have a score of the company available on the site. I cannot give any company specific recommendation because I'm a part of a PMS business now, and for my compliance officer strictly advised me whenever if I go on TV channel now I don't trust customer. Even sometimes the anchor will force me to talk about company specific, and I said I cannot give company specific advice. We do have a score of the company available on the site. Please use that score to decide what needs to be done with that company. Uday is saying, what is your view on the oil and gas sector? The companies that are manufacturing goods for this sector, is it still getting orders? You are right. I think the demand for oil and gas is going to remain little high. And those who are basically supplying goods and services to that sector, they should reasonably do good well. I agree with your assessment. So my sense is, now it's a very funny thing I was reading, There are 3 reports. And where I was reading, I think I was reading in Barron or I was reading in Wall Street last Sunday. I'm talking about day before yesterday. 3 agencies are BP, that is British Petroleum. Then another was IEA, International Energy Association. And number 3 is OPEC. Now when you look at the demand outlook for oil and gas sector, each one is varying from other. Now this is something which is very unique kind of. I have not come across this kind of a divergence that has happened in terms of the prediction of. So someone is saying the peak demand will come by 2025 for the oil and gas sector. Someone is saying 25 years, 30 years, and someone is saying some different numbers altogether. I can't remember that. But all 3 have a very different kind of a numbers and outlook on that. Even in terms of, one is saying the demand outlook will be less in this calendar year. OPEC is saying the demand outlook would be much better. And so, the difference is huge actually. So, the data that are coming out on the oil and gas side is little different, little challenging. But overall, my sense is that there will be more demand for the gas, that's for sure. And hence, if you can focus more on the gas side of the business than the oil side of business, I think that looks more promising. That's what my personal opinion is. Nimesh is saying, by song for that, Bombay se gaye, Delhi se gaye, Patna se gaye, Pune fir bhi na mila sajna, Juhi Chawla. You are right actually. So people know, it's not that people don't know. Sometimes we make mistakes despite knowing that we are making mistake. It's like, people know that smoking a cigarette is injurious to health, but people do smoke, am I right? People know that when you drink liquor in excess quantity, alcohol, it does cause a problem to your liver, but people do drink, am I right? People know that you should not be consuming drugs, when people do get habituated to the drugs. So sometimes people bolte na aabil mujhe maar. That's exactly what people does. Knowingly, sometimes sometimes the complete my friend has made money, I'm missing out. Let me do something different so that I can make money, and that's why they basically. And I keep saying, one of the best way to create wealth in the market, be monk, not the monkey. Monkey is little restless. Monk is very, very calm and composed. And learn from if you look at the most successful investors in the world, they have one common characteristics, and they were all monk. They were never been monkey, and that's why they've been able to create wealth. So sometimes your strategy may not play out. That's fine. That's a part of nature. कोई बैट्समैन हर एक इनिंग में सेंचुरी मारता है क्या? कोई बॉलर हर एक ओवर में विकेट लेता है क्या? नहीं लेता है ना. The same with the fund manager. He may underperform. That strategy may underperform. But if you apply consistently, you will reap handsome dividends. पर हमारा प्रॉब्लम क्या है? Every ball we want to hit sixes, or every ball we want to take a wicket, और वो नहीं होता है, then we get frustrated. Absolutely right, Nimesh ji. I think you seem to be a very big fan of Juhi Chawla. K. Bangaria sir is saying, is it possible managing fiscal deficit view of the forthcoming 5 state election? And it is very difficult for alliance government. If that is so, how will do manufacturing field? How will do? How will do the manufacturing field? So I'm just trying to make an attempt on the second part of your question. But see, I think the life is much easier for the government to manage fiscal deficit. Why? RBI has given more than what but the government was expecting it to give in terms of dividend. The tax collection on direct tax front is quite robust. So I don't think it's a difficult job for the government to manage the fiscal deficit. Then I wrote one blog. You should read that blog, which I said that country like India need a fiscal deficit. It's a wishful thinking up to deficit, because if you don't have the fiscal deficit, how would the growth would come? But how much you manage the deficit, I think which is very. And on the alliance part, I think government will have to give them something, whether it's a Bihar or whether it's an Andhra Pradesh. I think government will have to come out something to please the LA partners. So how will it do the manufacturing field? I'm not really getting clarity on what exactly you want to say. But my sense is that manufacturing, government wants to also create employment. Am I right? They don't want to have youth to remain unemployed. And manufacturing sector is one of the best way you can create. If you boost manufacturing through PLI, through other schemes, it will help to generate employment. And if you generate employment, more people will be better off, and more people better off, they would consume more. If they consume more demand for goods and services, that means more demand for manufacturing, so it can help to create the virtuous cycle. So my sense is that fiscal deficit will remain under control for this budget, number one. Number two, government will give some benefit to the state like Bihar and Andhra Pradesh. That's my personal opinion, not MarketsMojo opinion. And number three, I think there will be something for the manufacturing sector in the upcoming budget. Benson Peter saying, wish you a great day. Once again, thanks for your valuable insight into equity investment. You have indicated many times that this year that a major correction is expected, especially mid and small cap. There are Mojo PMS that have moved to large caps to 90% to other side. The number of demat accounts in the country are going up by millions. How does this work then? These new demands in the market keep buying available stock. How can the correction happen? Benson sir, you are. It's a beautiful question. Thanks for this question, sir. I really appreciate that your question, and you seems to be well knowledgeable in terms of what's happening in the market. The corrections can happen is nothing to do with the demand and nothing to do with this one. The same people, those who are buyer, can turn a seller if market has to correct by 5%. I'm just giving a hypothetical example. Don't expect that I'm saying market will correct by 5%. So there is nothing called permanency in the investor psyche. It takes a fraction of seconds a person to become from bull to bear. Okay, जो आदमी आज ले रहा है वो कल बेच भी सकता है with a double the force. Am I right? So it's a question of sentiment. As long as the sentiments are good, the market will remain buoyant. Now, for some reason, the sentiment turns bad, then even whether the new demat accounts or no demat accounts, you will see the outflow coming in from not only from mutual fund, from your personal portfolio also, because people won't try to lack in. Because see, today the greed is the name of the game. The moment fear comes in, that fear will, and you'll be surprised to know that the 60%, 70% of the demat accounts which are there right now have not seen the major corrections in the market, because all these demat accounts have been opened up post-COVID. And post-COVID, we have not seen any meaningful corrections in the market. Am I right? So they don't know what is corrections. So how they behave when some corrections happen, I think it will be an area to watch. And my sense is that even if the small corrections come, it can accentuate. Why? Because of the fear factor. And that's what my sense is. So what could cause that? I have no idea at this point of time. Whether it's a valuation concern, whether it's a government policy action, because something happens in the world economy and that calls for a correction, I don't know. But something has to trigger that. What is that trigger point? I have no idea. to Hetal Kumar Singh, sir, your views on real estate sector and EV as well as battery makers, please. I'm very happy to have this question, Hetal ji, because one question that EV was, dominating was 2 years back. 2 साल से किसी ने मुझे EV के बारे में पूछा नहीं है. In one of the webinars, I did mention that was the name of the game. So, and if you go back to that time also, what I predicted is coming true, fortunately. EV is a very evolving product. Tomorrow, people are not going to buy EV because it's an EV. They're going to buy EV because of the feature that product offers. For example, mobile phones. So when I bought my first mobile phone, that was a Siemens, very big one, okay? Which was, I bought mobile to bought that mobile to talk and receive call. Am I right? No one today buy mobile to talk. वो तो basic feature है. When you buy mobile, you decide which brand to buy based on the feature that mobile offers in terms of camera, in terms of other things and so on and so forth. Am I right? Same is going to happen to the EV. So one who basically, if you all know that one of the Chinese companies done extremely well in that space in giving a tough competition to even the Tesla, which has been the pioneer. And that's going to happen. So I think it's a very evolving space. The technology of EV today will be redundant technology of tomorrow. And I did mention in one of the media interaction also that what happened to the mobile phone, something similar will happen to the EV. You know who is the first mobile phone manufacturer who was the first brand in the mobile phones? That brand is nowhere in the business today in the mobile phone. Why? Because the technology advancement happens. So what happened with mobile phone? For example, Nokia connecting people, one of the largest brand. No one talks about Nokia today. Am I right? So something similar will happen with EV. The EV space is going to be very fast, very speed. The technology changes that could happen is very fast. And something similar will happen with battery also. Remember that, because the battery of today will be obsolete of tomorrow. Because people are looking at how do we basically compact more what we call power in a smaller size battery. So technology advancement. See, EV and battery both are combined. Am I right? It's a critical component of same way again mobile phone. Mobile phone में battery कितना लंबा चलता है, that's become one of the key, what we call key changer. Am I right? Would you buy a mobile phone which drains out in 3 hours? Answer is no. And people today basically do say, they advertise and they announce prominently one of the features is that long-lasting battery. Am I right? For number of talk hours and so on and so forth. So EV and battery are part of that. And as the EV evolves, battery will have to evolve, where you are able to put in more power so that you don't need to recharge your car in a short distance. So I think that's what. And as far as the real estate sector is concerned, my view is that it's running little ahead of the fundamentals. I know the real estate prices are going up, demand is robust, so on and so forth. Even what is happening in the equity market is also helping real estate prices to go up, because people are locking in some profits in the equity market and buying real estate, or they are not locking in profits, but they are confident that since we are making good money, let me go pay a small token of money and buy on real estate on EMI, and my equity income will take care of that. So this is what is happening. I'm not very sure, and there are certain corporate governance issue. I do believe in the real estate sector. So my view on the real estate sector at this point of time is not so great. EV and battery were very similar purely because of technological changes, and that could disrupt the incumbent players. Do we don't have questions, Amir, or we are because of time you are saying no questions? Let's take 2 more questions, because as I mentioned in my beginning that I wanted to make my presence a little small so that we can take more questions. So let's take 2 more questions and then we'll wind up. Please share your view on auto sector. Is your previously you hold auto sector or book profit? Alan, sir, we do have one company in auto. In fact, our highest exposure right now in PMS is auto sector. We do believe that it will be more of again stock specific than the overall. Auto sector is facing some amount of a slowdown. maybe because of high base effect, maybe because of the new models is the name of the game. So if you are not able to, and there is a price cuts which has been announced by a couple of auto players, but we do own auto company in our PMS. We do believe that company should do extremely well. The numbers as and when they come out with for June, they will be excellent numbers. So we are stock specific in auto sector, but overall auto as a sector may not outperform. That's my last question, if you don't mind. Prasad, how should you follow Mojo recommendation to buy any share or mutual fund? Like today, Mojo recommends some stocks. Should we immediately buy it or not? Please, I do guide. Please, you should buy immediately. Don't wait for the this one, because the script may go up and then you'll keep waiting to buy. So my advice would be, as and when the company become a Mojo stock or any company come in the Mojo one, please go ahead and buy without any waiting period. That's what my advice would be. With this, thanks a lot everyone taking time out and attending this webinar. Please note that on Thursday we have a very interesting webinar coming up where Mohit, along with the first time, will have our group CEO Amit Golia going live on the webinar. Please attend. There is an important announcement that Mohit and Amit are going to make. So don't miss out that webinar. Please convey to your friends and relatives. If they wish to attend also, they should attend this webinar. I don't think they will repent their decision to attend the webinar. With this, good night, take care. I'll be in front of you. No, I'll be in front of you again on next Tuesday with all customers with my budget analysis. For our PMS customers, I'll be in front of you on Friday, because Thursday Mohit and Amit are going live. So I will not be in front of our PMS customer. And instead of Thursday, I'll be there with you on Friday. Some interesting data points again in front of you. Thanks a lot. Good night. Take care.